Good day, everyone. I'm David Paul. I'm the Managing Director of VectorVest in the UK. And today I would just like to talk about the process of trading. And at VectorVest we have a process, and like many other disciplines in life, if you focus on perfect execution of the process, the results take care of themselves. Step one, and the first part of the process, is very simple. It's market direction. And our founder, Bart Toledo, says that the most important thing to know is whether the market is going up or down. Everything follows from that. And that was amply illustrated in October, November, December last year, where the stock market was falling and falling hard. And there was very little money to be made if you were buying stocks. And then all of a sudden, somewhere between Christmas and New Year, the trend changed, and January, February and March and into the first trading day of April has been a great time to be in the stock market. At VectorVest, the first step is to know whether the thing is rising or falling. And on the next chart, I've got the composite of VectorVest UK. Now, it's a composite of all of the shares that we follow on the LSE and AIM, equally weighted. So it's 2,200 shares, equally weighted, and we firmly believe that an equally weighted index or composite reflects the sentiment of the market. And as you can see from the two little arrows on the top left-hand corner, there's a red triangle. That was the trend of the UK stock market breaking down on the 5th of October. And then again on the 9th of January, that was the trend of the UK stock market rising based on our most conservative market timing signal, which is called a confirmed call, and that's still in place on the 2nd of April. Okay, so UK market rising, that's the first step in the process. The next slide shows the American market, and again our confirmed calls for the American market, which showed a sell-off in October and showed a confirmed up again in January, and as I speak, that confirmed up is still in place. And those of you that watch charts will have seen that the American market has broken out of a triangular consolidation that's been in place for the last 3 weeks, and that bodes very well for a move into May, in my humble opinion. So that's the first step. Is the market rising or falling? The second step is all about value, and I was taught very early in life that the only way to make money in anything is to find the value of something and then pay less for it. Benjamin Graham pretty much says the same thing in his book, The Intelligent Investor. So at VectorVest, we put a valuation to every share every single day, and the sums of how we go about calculating that value are fully revealed. It's revealed in chapter 3 of Dr. Toledo's book, Stocks, Strategies and Common Sense, which comes with a 30-day trial of VectorVest. So we favor undervalued shares. That's the second step. Third step is all about earnings and earnings per share growth. And we summarize that in a VectorVest metric called relative value. And we look at the price, value, earnings per share growth, and we compare that to a AAA rated corporate bond. And if your share has got a relative value of greater than 1, that means that we believe that it's going to outperform the risk-free rate as measured by a AAA rated corporate bond. I think that relative value is the most important number on VectorVest, and I don't like to get involved in shares myself that have a relative value of less than 1.3. And that infers that the share is going to outperform the risk-free rate by 30% over a window of 3 years into the future. Anything above 1.3 VectorVest rate is excellent. Now, the next step is the safety and the predictability of the earnings stream. We place great store on what we call relative safety. And relative safety, the algorithm looks at the balance sheet, the income statement, the cash flow of all the 2,200 companies we follow, and spits out a number which represents risk. On a scale between 0 and 2, if the share has a relative safety of greater than 1, that means that it's fair. And above 1.3, on a scale between 0 and 2, this is a company that's making money, and all those financial ratios are getting better. If you're a conservative investor and you don't like surprises, then you would push the relative safety high in your set of criteria. More aggressive investors that manage risk proactively with stop-loss orders could, in fact, bring the relative safety down. Okay, so that's and then, of course, the last step, the fifth step, is in fact the trend of the share itself, and we favor shares that are trending upwards. The old adage is that I've never seen a share too high not to go higher and too low not to go lower. So we want the share to be doing what we wish it to do. In other words, it's rising. It's already doing what we want it to do. We have a number that measures the trends called relative timing, or RT. If the RT is greater than 1, that's a share that's trending upwards. The further above 1, that's the faster it's trending upwards. So at VectorVest, folks, our process is very simple. The first step is market timing. Is the market rising? The overall market should be rising. I firmly believe that's 70% of the exercise. The next step is valuation, and we favor undervalued stocks. The next step is earnings per share growth. The next step is earnings per share safety, and then we want the share to be agreeing with our view. And the process is all about finding market direction that's positive, favoring undervalued shares that are growing their earnings strongly and safely, that are rising in price. And if you can tick those boxes off, and VectorVest gives you numbers so that you can tick those boxes off, then that's going to put the probability of success at your back. So good investing, everyone. I think that the Dow and the S&P breaking up last night bode very well for a move through Q1 earnings in the US. My own personal belief, therefore it's true for me, is that this local debacle, Brexit debacle, will sooner or later be a big positive for the UK stock market, and that blue chip UK stocks are cheap. That's my own view. Thanks for listening. Bye-bye.